Tesla stock is cheap right now. It has traded flat over the last year while its 2022 earnings estimates have risen 70%. So what is the separation between Tesla's earnings and Tesla's stock price? I thought the market was always right. Well, there's two reasons Tesla stock has come down lately. The first reason is the Fed. The Fed has announced that they will be increasing interest rates, which is supposed to affect the long-term earnings of growth companies. However, I don't think Tesla should be getting looped in with these long-term growth companies like they have in the past. This is because Tesla's PE ratio has compressed way faster than people realize. Just a year ago, it was at 1,000 when Tesla's was still 880 as it is now. And now Tesla's PE is down to sitting about 100. They have become very profitable and they are earning way more cash than they know what to spend it on. Rising interest rates don't really hurt Tesla as they have very little debt left. I think about $6 billion left in debt on the balance sheet with about $18 billion in cash. Any worries of inflation can be responded to by raising car prices. Tesla seriously has unlimited demand. Despite raising prices by like 6,000 this year, Tesla currently have wait times of about 1 year to take delivery of a vehicle. And once full self-driving sees wide release and regulatory approval, owning a Tesla is going to be equivalent to owning an asset that not only appreciates in value, but generates income. So inflation and rising interest rates have both dragged the price down of late, and they should not have been. The second thing that has dragged down Tesla's stock price recently is the Q4 earnings call by Elon Musk. Despite beating quarterly estimates on revenue and EPS, Tesla stock fell 11% the day following their Q4 earnings. The Q4 earnings call was a big disappointment to institutional investors who wanted to hear updates on Cybertruck, on the $25,000 car, etc. But Elon Musk only wanted to talk about full self-driving and robots. In fact, Musk went so far as to say that they're not even working on a $25,000 car. Despite Musk having good reasons for this, in that full self-driving are inherently going to make transportation cheaper and provide 5 times more utility to your vehicle, the call still spooked institutional investors a lot. This is because of a couple of reasons, but the main one is that institutional investors are managing other people's money. So for them to take this highly speculative idea of robots and redefining the economy, they have to then give that argument to their clients and convince them of the same thing. And they're not Elon Musk. To institutional investors who are already invested in Tesla, it's mostly just because of their car business. And like I said, Tesla's stock price is trading at a fair value, if not undervalued, for its car business. So that's what the institutional investors wanted to hear. For some reason, they viewed Musk's preference on focusing on full self-driving robots as being unfocused on the business, when Musk is just trying to articulate how important solving that could be. However, because it sounds so speculative to institutional investors, it creates a massive opportunity for us retail investors. Like Benjamin Graham talks about in his book, The Intelligent Investor, I believe there is a certain margin of safety associated with Tesla stock right now. Most analyst price targets are sitting above Tesla's current value, and I'm telling you that no analysts are including full self-driving in their valuation models. This means that by buying Tesla stock today, you're paying a fair price or an undervalued price for Tesla's car business, but by owning Tesla stock, you also get the possibility of FSD coming into wide release, being safer than human drivers and generating billions in yearly revenue. It's going to happen like that, as Elon Musk said on the call. It's going to be the most influential software upgrade in history, and it's just going to happen overnight. By owning Tesla stock, you're paying a fair value for the business, and I keep saying this, but you get the potential of the most big increase in asset price in history. I mean, look at all of these price targets today from analysts who are still not factoring in the potential of full self-driving, and you are still getting Tesla stock at a way better price. And if you've been following the progression of full self-driving, you know that it's getting close. I encourage you to check out Dirty Tesla's channel. He posts weekly content of the FSD progression. One thing that I've observed watching Tesla's FSD progression is that it's a lot like climbing a mountain. Sometimes you come to a point on your hike where you can't go any further and you actually have to go back down the mountain a little bit to find a new way up. This happened, for example, when Tesla went from using both the radar and a camera to just a camera for the autonomous driving. They took a couple steps back, the cars were struggling for a bit, but we've seen an exponential increase in their ability to drive safely since making that switch. Every time Tesla makes an upgrade to their software, the cars struggle for a bit, but then they become better than they were before. And the current step that they're taking is, as discussed on Lex Friedman's podcast with Elon Musk, their software is now going into what they call a single stack. I'm not going to go into the technicalities of what this means right now, but this could potentially be the last step back before the ultimate success comes and they reach the peak of the mountain. And I mean it when I say that nobody is pricing this potential in right now. The stock dropped 11% yesterday because it all sounded too hard to believe. But that's what they said 10 years ago at the concept of electric vehicles themselves. I mean it when I say that Tesla is the next Tesla, and this asset increase, nobody sees coming. By buying Tesla stock today, you literally get the chance at something amazing, 20x, 30x within the next decade, and you're buying the stock at a fair price. You're not paying an absurd PE ratio. You're literally getting in at a spot where you're not going to lose money because the car business is at fair value right now, but you get the potential of these software margins just going through the roof. Thanks for watching me talk about Tesla. Like and subscribe, and my name's Jake.